All right, with the iConsumer shareholder meeting on Wednesday, November 28th, 2018. My name is Kimberly Logan. I run ops here at iConsumer. I am joined by our CEO, Rob Grosshandler, and our CTO, Sandy Schleicher. I said it wrong again, Sandy Schleicher. I just discovered today that I've been saying Sandy's last name wrong for about 10 years. So
the thing is that you never actually say my last name to me, so I never heard it.
Very true. Very true. So Rob is actually going to lead this meeting. Sandy and I will be here in the background. If you have questions, there is an option on the navigation portal. You click on the little questions box and we'll do our best to answer it. And we're ready to kick it off. Take it away, Rob.
Well, thank you, Kim. Thank you, Sandy. And thank you to our shareholders and members for making this all possible. One of the fun parts of being basically a virtual company is we get to hold virtual shareholder meetings. And as our poll indicates, none of our attendees, at least as of when we took the poll, are experienced at shareholder meetings. So I'm telling you, this is going to be the most perfect, best shareholder meeting you've ever been to. It is my pleasure. It is my pleasure to walk us through this today. We're going to talk a little bit about why we are where we are, how we got here, a little bit of what we expect from the 2018 holiday season, what we expect in 2019, what we're going to be working towards, a little bit about the math behind membership growth, which is the most important thing that we'll be able to talk about here tonight. And then lastly, our company business. We have some things that we want to share with you that in a traditional shareholder meeting might come first, but because this is so simple, we're going to put them last so that if you fall asleep, you fall asleep for the boring stuff later. There is also a disclaimer. We are going to be talking about things that haven't happened yet. Much of this stuff is our opinion, our desires, our hopes, our beliefs, and it may not come true. With that, I'm going to move forward. I am going to repeat what Kim said. We do want to answer questions if you have them. Well, that's an interesting screen. We're going to move forward even one more screen. And we're going to talk about why iConsumer. And we're going to talk about it from the way we do this with prospective investors. I think that might be the most educational approach to this particular shareholder meeting. We set out to marry the rewards and loyalty business, and there's a lot of large competitors in this space. We have some pictures here. We have the Groupons and the Retail Me Nots, the credit card guys like the Chase Sapphires of the world, the Ebates of the world. They're all in the business of offering rewards to customers for behavior and creating loyalty. We married that with Wall Street, and we did that by replacing miles or points or even traditional cash back with our publicly traded equity, RWRDP, which is now my favorite 5 letters, and that's now the reward. No one really has ever done that before, and it's been a learning experience for us. It ended up giving us what we wanted it to give us, which was a really different reward mechanism that would motivate a new generation of shoppers in ways they hadn't been motivated before, for reasons they hadn't been motivated before, but in a way that was really, really familiar to them. So we wanted it to be different, but the same. So how is it different? How is it the same? Retailers pay iConsumer to bring and retain customers, where others share that revenue in points and cash back. iConsumer shares that with its customers in the form of the equity of iConsumer. And we do this because we've learned the 99% are afraid to invest, so we made investing free. We did this because it's an enormous market. 50% of Americans hold rewards credit cards, yet 31% of those don't actually ever redeem those rewards. And as you know, tens and tens of millions of Americans belong to reward sites, and the number is equally large outside the United States. Fundamentally, we gave ordinary people a chance at the American dream. Even if they're not Americans, they have a chance at the American dream just by shopping, just what comes naturally to them. One of the fun things about doing a online shareholder meeting is that we get to use very up-to-the-minute data. So as you can see from this particular picture, we have, as of about an hour ago, 53,617 shareholders and shareholders in waiting, and it's growing rapidly. We're really pleased with this. One of the ways that you can tell that it's working is by our stock price. So over the course of the last year or so, it's traded as low as 2 cents and as high as $1.05. Someone sold their stock for $1.05. If I were allowed to sell my stock, and I'm not allowed to sell my stock, I think that $1.05 was a great number. Moving on, I found that when I've done these presentations that people still don't necessarily understand how iConsumer makes money. And we make money just the same way as any of these other reward sites makes money, right? We bring a customer, a prospective customer, to a retailer. We have over 1,900 retailers that we do business with. And the retailer handles the fulfillment. So you go shop at Macy's and you go buy a sweater. You go pay $100 for that sweater. And Macy's pays us, let's say, $5. They pay us a commission for bringing you to Macy's. Macy's does the billing. Macy's collects the money. Macy's sends us that $5. Macy's is a sort of an average one of our retailers. The commission we make ranges from give or take 1%, sometimes higher than 20%. Amazon, on average, pays us about 5%. We then share that reward with the member in the form of our stock, in the form of Bitcoin, now in the form of cash back, with the exception of Amazon, where we aren't sharing it, we're making it all. But it's a very simple process that, as I say, tens of millions of people do every day. We just want our fair share, or perhaps more than our fair share of that business. It took us about 3 years to make this all work. We expected it to take 1.5 years, maybe 2, when I was feeling very pessimistic. It took us 3 years to be feature complete. Most of that happened in the regulatory process. We had lots of experts tell us what to expect. They were all wrong. We knew we were being pioneers. We suffered for being pioneers. It took that 3 years, most of it being regulatory. But at the end of the day, we accomplished what we wanted to accomplish. First and foremost, we have a publicly priced and publicly traded reward, our equity, RWRDP. And secondly, we got lots of experience in understanding what our customer, what our shopper expected from us, what they wanted from us, and where they wanted us to go. And those two things are sort of crucial to building a great, big, massive business. At the end of the day, as I said, we were feature complete in the summer of 2018. Feature complete for us meant that we became and stayed public. That meant navigating all of the alphabet soup of the regulatory agencies, the SECs and FINRAs of the world. It also meant that we figured out how to make money off of each and every customer, so that when you go shop at Macy's, we make money. That's really important. It's monetization. We also figured out another piece of the puzzle, which was the gamification liquidity piece. We always thought that being able to see a stock chart that went up and down and up and down, and hopefully mostly up and to the right, would be a good thing. And indeed, it turned out that it was. And that, again, began to be real in the summer of 2018. Another thing that was important to making this all work was making sure we could get membership at scale. The fact that could we bring in lots of members at a price that made sense, and would our systems handle it? Because the last thing you want to have happen is to be really, really successful and then to disappoint zillions of customers. We actually did that last summer, the summer of 2017, where we brought in 30,000 people at a very low cost in a course of just 2.5, 3 months, mostly through social media channels. It turned out that the customers that we acquired that way weren't great customers. So the next thing we did was making sure that as we improved what we were doing, that we could bring in customers that did shop and shopped heavily. And so in the first quarter of this year, I'm very pleased to say that we accomplished a profitable member acquisition. That is, we brought people in and they paid for themselves quickly. I'm going to talk a little bit more about this later and explain the acronym CAC and CLV. But the really important piece there is the fast payback piece. So what's that mean to a customer? What's that mean to a shareholder? As I showed you on a prior slide, right, our stock is traded from anywhere from 2 cents to $1.05. Our customers, our shareholders who earned their stock, earned it at an initial price of 4.5 cents a share, simply for shopping, and most recently at 15 cents per share. It's trading, last time it traded was for 18 cents a share. So those folks who went and sold, and we've had a handful, maybe 2 handfuls, who went and sold hundreds or thousands of shares of RWRDP on the OTC market, profited handsomely. Can't speak that word. Profited is a good word to be able to speak as well. So really proud of this fact that our early customers were able to sell their shares on a regulated market, SEC and FINRA regulated market, unlike Bitcoin, profitably. What do we expect from 2018? End of 2018, we have about a month left. Well, this chart, although it's really hard to read the numbers, is most important because it shows up and to the right. This is new member acquisition. And as you can see, we went from 10 or 15 folks per day. We peaked over 60 a little bit earlier this week. And more importantly than the number of folks coming in is the fact that they are shopping. They are going to stores and spending money, and we're making money every time they shop. This number, the number of people coming in, however, is still a little low, which leads us back to another point that I'll get to in our 2019 goals, which is first and foremost to be cash flow break even. To do that, we need to increase our membership. To do that, we're emphasizing share, shop, earn, learn. These are themes that came out of a big survey we did in October. And some of the other things that came out of that survey was that our customers said they were having a hard time telling their friends about iConsumer. They didn't get it. We were talking about Bitcoin, we were talking about equity, they had never heard of iConsumer. So one of the places that we're investing significantly more money than we ever have before is in PR efforts. Those began in late November. You should start seeing some stuff hit the news wires in December and January, again, to make it easy for pass along to happen, so that when you hear about iConsumer from a friend of yours, you say, oh yeah, I read about them in the, let's hope, the New York Times or the Wall Street Journal. They sound really interesting. Another thing that survey told us was that our members wanted us to simplify the message, and the message of both stock and Bitcoin didn't resonate. So we added back cash back to the mix, so that now when an iConsumer member goes and tells their friend, you should go use iConsumer, they can say, you get cash back like XYZ site, and you also get equity in this cool new company, a public startup. So that's why cash back is part of the mix again, survey said. We're also working on some strategic relationships. We want other people talking about iConsumer so that iConsumer's membership grows. We don't have any to announce yet, but it's one of the things I'm spending a great deal of my time working on, is making sure that we have partners out there working to make this all successful. This required some additional resources, so you'll hear some announcements from us later this month or in the first quarter of 2019 about additional sales and marketing resources. We need to up our game both in the quality of offers that we put in front of our members, as well as the quality of messaging we use to convey those offers. And then lastly, out of the survey came a really wonderful, gratifying message, which was that our members, our shareholders, really appreciated our communication and liked the fact that we were talking about how to be an investor in a startup, how to be an investor on the OTC market. The communications that we were doing were well liked. So we're going to do more of that. We're going to focus more on Shareholder Academy. We brought Shareholder Academy into the main portion of the iConsumer site, as opposed to being a separate property. It now is really a property inside of iConsumer, and you're going to see more and more from us. We're also using LinkedIn and Facebook and social media channels to spread the word about how you can come to iConsumer and shop, earn, and learn. Once we hit cash flow break even, one of the things that may happen, we hope is happening, that we're going to work hard to make happen, is to increase the liquidity. The easier it is for investors who paid money for their stock or for investors who earn their stock to sell their stock will become a self-fulfilling prophecy. At least that's my expectation. You can earn it by shopping at Macy's, and now you can go sell it on the OTC. The easier we make that, the better off we are. The easier we make it, hopefully that will make our stock price go up. One of the things that we're doing, and as part of that, is exploring uplisting. Uplisting is the act of going from the OTC markets, where we are traded, to being listed on an exchange like the NYSE or the NASDAQ. The positives of being listed on an exchange is greater institutional interest in our stock, a probable greater liquidity in our stock, and that generally leads to a higher stock price. The problem with being listed on the NYSE or the NASDAQ is that it's much more expensive. It will probably cost us 3, 4, 5 times what it costs us to be quoted on the OTC market. That's a 2019 goal. I don't know that we're going to accomplish that goal, but we are going to be putting the pieces in place to allow us to do that. If it's not in 2019, it'll be in 2020. We have to be sizable enough to be able to afford the extra cost of being listed on an exchange. The other thing we've done in that regard is hired an investor relations firm. These are folks who are skilled at making sure that the investment community, the folks who read the Wall Street Journal and Barron's and Investors Daily, know about iConsumer, so that there's a greater appetite for our stock. That also leads into the increased funding. We need more money. We need to spend this on marketing so that instead of 60 people a day joining iConsumer and shopping, we have 600 people a day joining and shopping and 6,000 people a day. We want to hit 1 million new members shopping in 2019. That's a stretch goal, but it is certainly possible for us to do it. The technology is in place. The people are in place. We simply need to be spending money on marketing. The IR folks can help us with that. They are skilled at making introductions to folks who might be interested in being investors in iConsumer. Along with that, we expect to be exhibiting, if you will, or talking at one or more retail-oriented investor conferences. One of the things that we found about iConsumer and the journey that got us here is that we're not yet of interest to the traditional institutional investor, the Chases of the world, the JP Morgans of the world. We're not yet their cup of tea, but we are the cup of tea for people who look like ordinary people. So getting in front of ordinary people, maybe ordinary people with a large checkbook, is one of our goals for next year. So do that via the retail-oriented investor conferences. And that then leads us to the business portion of the event after, because I got out of sequence here, after I talk about profitable member acquisition, right? So CAC is customer acquisition cost. This is what every direct response company measures itself by. How much does it cost you to bring in a customer? And for us, it's costing us less than $10 in cash on average. Okay, that's great. But what happens after you spent that $10? That's payback, right? It takes us less than 45 days, less than 60 days, less than 30 days, on average, less than 45 days for a new customer to pay for themselves. And this is why we're seeking that $500,000 in marketing money. We need to fund a lot more customers coming in the front door, spending money, and making us cash flow break even. We're estimating a customer lifetime value, a CLV, of greater than $75. We really haven't had enough customers in the mix for long enough to make this a more accurate number. But so long as a customer pays more, generates more revenue for us, more profit for us, than it cost us to bring them in, that's a good day. $75 would be a great day. A little bit more about the business of iConsumer. It is brought to you, as many of you know, by the team that brought you iGive. And why this is important is that we're able to leverage some of the things that iGive has built over the 20 some odd years of its existence, right? We have lots of experience in the rewards and loyalty business, 350,000 members, 35,000 checks to charities every year. So the challenges of scale have already been overcome. Now the challenge is making sure we have sufficient members so that we have sufficient revenue so that we are cash flow break even. The other thing I wanted to show you is pictures of some of our teammates. One of the reasons why is it's always fun to put faces to names. And the other reason, there we go, there's Kim. And Sandy's probably about to come on as well.
Okay, so Kim did it.
There you go. And the other reason for doing this is to make sure that whomever might watch this in the future, we're recording this shareholder meeting for posterity, gets to see our full color faces with lots of light instead of this at 7 o'clock at night Chicago time shareholder meeting. So again, thank you to everybody for making 7 o'clock at night a possibility. Now, on to the company business. This is what very dry, ordinary company meetings look like. They talk about stuff. We're going to do three things. We're going to talk about the approval of our auditors. We're going to talk about the approval of the board of director, the singular director. And we're going to talk a bit about the rescission offer. First, I want you to know that I approved our auditors. That is Whipley and Company out of Minneapolis. They give us our audited financials, unlike most startups. Unlike all those Bitcoin and blockchain companies that you might have read about or seen, we have audited financials. We have years of audited financials for you to poke through and understand what it is that we're doing and make sure that somebody other than our staff has vetted the numbers. As you may or may not know, we have a single board of director, that's me, and this year I have proven myself yet again. Most importantly, I want to talk a bit about the rescission offer. Early this year, we did some stuff that the SEC thought we should have done differently. We disagreed with them, but they have way more lawyers than we have. So we agreed to agree and offered a small number, about 2,000 customers, the opportunity to sell back their shares, to rescind the transaction that earned them their shares. To do that, they had to agree to sell back those shares that they earned between February and May, and to give back the Bitcoin that they earned in February and May, through May. We didn't expect very many people to do that. They earned those shares at 9 cents. They were last traded at 18 cents. That offer ends December 6th. And we have had less than a handful of folks take us up on the offer to buy back shares for 19 cents that are currently trading at 18 cents. With that, I have just one more thing I need to do, which is to put up the obligatory safe harbor statement. Again, everything we've been talking about that looks forward in nature is our best guess. This is what we believe. but we may not be right about it. Indeed, I'm certain that something I said will not come true. That's life. If we have questions, I would love to answer them. I'm sure Kim or Sandy would also love to answer those questions. I see things blinking at me on our dashboard that make me think that maybe we do indeed have questions.
We do have a few questions.
All right.
Okay, so we've got just a handful, but if anybody else has questions, please feel free to send those to us, and we will try to answer them if we can. So the first question that I want to send to you, Rob, is why is the business model different for Amazon? Why isn't any of the commission shared with the members? And that is from Stephen.
Well, thank you, Stephen. The business model is different because Amazon requires it to be different. We would prefer to share our commissions that we earn from Amazon, but they will not let us. Interestingly, if they did let us, the amount of the commission would be much, much less. So instead of, call it 5% on average, we might make 1 or 1.5% on average. So even though we're not able to share the commission, because you're a shareholder, you are sharing in the value of that commission. It helps iConsumer. It adds to our bottom line, and our bottom line is what eventually drives our stock price. So you indirectly benefit from shopping at Amazon every time you indirectly benefit from shopping at Amazon because you go through iConsumer to get to Amazon. I do all my shopping through Amazon, and we earn 5%, and it's helping our bottom line.
Okay, next question. Has to do with the number of shareholders. This is from Tabitha. With so many shareholders, and right now we're talking about 50,000-ish, but you, in the webinar, you're talking about a million shareholders. Can we still make money from the shares by when there's that many shareholders?
This is a great question, Tabitha. It's the question of accretive versus dilutive. That is, does each new shareholder and their shopping reduce the value of shares or increase the value of shares because they shop? And there's actually a whole post on this at Shareholder Academy because it's a great question. But fundamentally, if each new shareholder brings us more value than what we pay for them, they're accretive. And so the absolute value of iConsumer goes up. At some point, if a shareholder becomes a shareholder, but they reduce the value of iConsumer because they don't shop as much as it costs us to acquire them, then that's a bad thing. If it ever becomes a day when that's the case generally, where we are reducing the value to everybody of bringing in additional shareholders, we will stop doing that. There's nothing that says that we have to always be giving out shares every time someone becomes a customer or every time someone shops.
Okay, we've got another question here. Another one from Tabitha before we move on, and that is, how much does somebody have to spend to be considered a profitable iConsumer member?
So the question actually has by the month. So it's really simple. If it costs us $10 in cash to acquire a customer, and they bring us more than $10 in gross profit, they are profitable. That is a wondrous thing. It turns out that in the first 60 to 100 days, customers are bringing us somewhere on the order of $15 or $20 of gross profit. So it cost us 10, and we're banking 15 or 20. So from day 60, they're profitable. After that, we smile every time someone makes a purchase. On a per month basis, it sort of doesn't matter. Our cost of handling each and every customer is near zero. It is so small we don't even measure it. So whether you're a customer for 3 months or 6 months or a year, our costs, because we've designed it that way to have you as a customer, are negligible.
Okay, I'm going to tackle another Amazon question here from, and please forgive me if I butcher your name here, I apologize, from Leilani, and the question is, do they have to use the link to visit Amazon, or does it work with the iConsumer button? I'm going to take this one myself. Unfortunately, like Rob said, the rules with Amazon are a little bit different than most of our other stores. And they do not allow us to activate the button automatically for their site. So the answer is yes, you do have to click on a link on either the iConsumer website, within the iConsumer apps for either Android or iOS, or from an email or a web post or a Facebook post that we may send out there. Anything you want to add to that, Kim or Rob?
That sounds good to me.
Okay. And then a question from Michael. Why did the cost of shares lower after that $5 rise?
So this is a market. Somebody said they wanted to buy our shares for $1.05. I don't know who that was. They bought, I don't know how many shares they bought either. I could find that out. But they thought our shares that day were worth $1.05. Generally, people think our shares are worth that 18 cents. Some people thought our shares were worth 49 cents. It goes up and down. This is the market, and we have no way of predicting it. You will never, I hope, ever hear me say our shares will go up or will go down. My job is to help them go up, and if I do my job well, they'll go up a lot. But there is no guarantee, and the markets, there's no sense or rhyme or reason. Why did Amazon trade at $2 for a while, then $50 for a while, then $15 for a while, and now it's, I haven't looked at it recently, but call it $600, right? So it's perception, it is basic economics, and it is supply and demand. I much like it better at $1.05 than at 18 cents, however.
Kim, here's one for you. Can the links on the iConsumer site, apps, etc., be combined with smile.amazon.com?
Alas, no, because it goes directly to Amazon.com as opposed to that smile.amazon.com. iConsumer will only work with the Amazon site.
Okay. And I'm going to tackle another question here. The question, this is from Sherry, is what kind of security do you have on your site? Some of my friends have been hesitant to sign up because they don't want to give up their social security number, which is certainly a reasonable thing to be concerned about. I'm going to have to be a little bit vague here because we don't want to give away too much specific information. We follow industry standards. All traffic with our website is encrypted at this point. If you haven't noticed, there's been a big switch over in the last year to HTTPS traffic. That stands for secure, that S on the end. And that makes sure that the communications between your browser and our website are encrypted and nobody can intercept that. Then when you enter your information, we make sure that it's stored in a way that somebody can't get it out. And I'm going to leave things at that.
I would add to that you don't have to share your social security number until you like us, right? So go and trial iConsumer, and if you like the experience, you earn sufficient cash back or Bitcoin or shares that you want to transfer that outside of the iConsumer world. That's when you share your social security number. You do not need to do that ahead of time.
Kim, are you seeing any other questions here to ask? I think we're just about done. I think that's it.
Well, on behalf of all of us, we are building a great brand new kind of a company together. It is really, really fun, exploring what it means to be a investor in a startup, in a public startup with 50,000 plus shareholders and shareholders in waiting, to be able to do virtual shareholder meetings unlike anybody has ever done before, and to get the thank yous that we get every day in support in our Facebook. People answer, post comments in Shareholder Academy. All of that is just really, really rewarding. So we get rewards. Not only do we get cash back or Bitcoin or shares of RWRDP, but we get the satisfaction of knowing that we're building a new kind of company, giving a chance to people who have never thought they would be investors in a public company before, that chance. And people are saying thank you. And I just wanted to return that thank you to all of you. So thank you for coming in and enjoying us. And it's the holidays. Go shop.
So Rob, let me ask you one more question here. Have we been recording this conference, and are we gonna post it anywhere so that it can be shared?
That's a leading question. These people don't need to see it. They were here live. Yes,
but they
it
might
will
want
be
to share
on.
it.
Oh, they might want to share it.